If you're new to the crypto space and or trading in general and you're looking for an easy video that'll help you be able to go onto any chart and essentially figure out kind of what's going on, if it's overbought, oversold, find major areas, so you don't end up FOMO buying the top, so you don't become exit liquidity for the smart money, then this is the video for you. My name is EQ. I've helped over 1,500 people learn how to trade since 2021. And in this example, we're going to start from scratch on tradingview.com. This is the factory settings if you were to open TradingView, and we're on the daily chart on Bitcoin. And the first thing I like to do when I get into a chart is kind of zoom out and see where the overall trend is moving. So you can see that we have been in an uptrend since October of 2023. So when you're talking about things being overbought versus oversold, on the longer terms, this is relatively overbought. You can even see based on the 2021 bull run, we're already getting pretty close to doubling price. And it looks like it has a little bit of room at some point on the longer terms for a retracement, which means that price will be pulling back. And just to give you an example of something that is overbought versus oversold, we can go to the avalanche or AVAX chart, and you'll see that price is sitting towards the bottom. This would be considered oversold. You can see that price is even getting close to what it was worth in value during the bear market. And oversold basically means that price is being suppressed. It means that at some point it was worth a lot more than it is currently worth. Therefore, the sellers have been winning this battle. And from a risk to reward perspective, you're starting to see that there's more upside potential than downside. Just to give you the idea as well, if you wanted to drop down to bear market bottoms, that's about a 63% loss. But if you were to test this range high from 2021, you're looking at about a 523% move. And that's where the name oversold comes from, because there's a lot more upside room than downside room. So in the sense of this being overbought, as you can see, there's a lot more buyers, which means that price is a lot higher and shows a lot more downside risk. If this wanted to test the all-time high, that's about 11% move. If Bitcoin wanted to go up to 150%, that's going to be about a 35% move. And let's say Bitcoin wants to go up to 180,000, that's going to be about a 61% move. Whereas to the downside, we're going to talk about some of these areas, which why I'm targeting them. But if we wanted to test down to, let's say, 75,000, that's a 32% drop from current price. Even down to here at 53,000 is a 52%. And you have to remember that it's very common for projects to lose 50 to 85% of their value when going from the top of a bull run to a bottom of a bear run. So even if we do top out at, let's say, 160,000 and Bitcoin has the opportunity to get back to around 80,000, let's say 76,000, that's going to be about a 52% drop. And unfortunately, some people are going to want to buy in at the top when this is even more overbought. And they would buy in essentially up here, and then they'd be looking to a topside return of 12.5% in order to get to 180,000, and then the downside risk going into a bear market is 52%. AKA, if you went in with $1,000, you'd be risking $500 to make $125. So now that we have all of that covered, let's get some key areas marked on the chart so we know kind of where there's some major supports and resistances. Support is going to be areas where price is finding a floor. And essentially, you could think of it as a crutch holding itself, and then price can move up from that point. So if I'm zoomed out on the daily, I can see there was a support here. We're going to have a support area here because you can see price bounced and went up, held support, went up, held support, took a nice impulse move. Right here is going to be another support area that we can see. There's a couple areas that tap. The more taps that you have, the better. So that's kind of why instead of putting this line down here and only touching one zone, I dragged it just a little bit higher just so you can go 1, 2, 3, because this is all nice points of contact as a support level. You have another one right here. So these two areas are bouncing on it, pushing up to all-time highs. And then right now we're currently testing a new support as well. From here, I like to add the resistances. We can add the one at the very top as well at about the all-time high. And you'll notice some of these areas are going to overlap, and that's fine. So this is a resistance here as well, double top and then bottomed out. We've already marked this area as a support, so this line itself is going to get changed colors into gold so that we know that's an SR flip, which I'll cover in a second as well. So this one is going to go back to yellow. And that's going to be another key support level. That's one that I forgot to add. And then right around here, we're going to add another resistance. And then we're also going to add one more resistance here for this point, and you'll explain why in a second. So one of the major things that you want to be looking for when you're finding supports and resistances are these SR flip zones, or areas in price action where you're finding support and resistances kind of being tested at the same price range. So you'll notice this line that's gold because you have resistance sell-off, and then you have a support as well, which pushes to all-time high. And we're creating a current support right now. So if this holds again, this could be a nice price range that every time we tap, we end up creating all-time highs as a support. This area down here that I marked can also be considered an SR flip because you can see that we held as a resistance and came down. And then when we came down and tested as a support, it was a quick test before price starts to push back up. Now from there, you've officially marked all the major supports and resistances. Now it's kind of time to figure out what direction price is moving. Are we going into an uptrend or a downtrend? And then where would that trend be breaking in order for this to change the direction? Now from this point, I'd like to connect some of these swing lows. So for example, to find some support, you can see these two higher lows are creating its own support system, where at the same time, these two lows, which before this price action was broken, was creating this consistent support level to watch price go up. And vice versa, if you go to connect these swing lows, you can see that if I put this uptrending resistance right around here, we've tapped 1, 2, 3 times, technically 4, 5 times as a resistance. This is going to act similar to the support and resistance lines, where the more times you're touching, the more consistent this trend is going to be. Now, I like to add this to the candle bodies, not the actual candle wicks. A lot of times you'll see on my charts in the Epic trading floor, I will add that volatility zone to pay respect to it. So you can see here a lot of these upper wicks get into this zone but drop out. So whenever price gets into this area, it becomes a potential high probability zone for a fake out going into the opposite direction. But now at this point, you already figured out a few things just from looking at the daily and marking up the chart. You know for overbought, we know for oversold, we know some of the key areas of support and resistance. We marked out some of those major uptrends and downtrends, connecting those swing highs and swing lows in order to kind of see where price is moving from a trend perspective. So from what we would call as a rising wedge, if you were looking at this resistance and this support, we officially have broken to the downside of the rising wedge. So it wouldn't be surprising if this SR flip, which was confirmed here, if you zoom in, you'll notice that price broke down, looked like we were going to come back in from that support, which we tested a couple times, 3 times to be exact, and then tested the backside as a resistance before price came down. So it wouldn't be a far-fetched idea if this wanted to come back up to see if we want to hit a resistance, and or if we break this trend to go to the downside, we could see this continue to break to the bottom of the rising wedge. Which, by the way, if you want to come trade with me in the Epic trading floor, get access to my trades, trend alerts, signals, all that type of stuff, it is free to sign up and create an account. There are limited all access passes available. That gets you access to my trades. It gets you access to the group coaching sessions, which are twice a week, every Tuesday and Thursday. All the courses, the overlays and oscillators on TradingView, all that type of stuff. And then if you want the one-on-one mentorship, which takes it to the next level and adds a one-on-one session with me every single week, there's currently 1 spot available. So I'll tag the link in the video. I'll add it in the description and the comments as well, or epictradingfloor.com, whatever makes it easier, and you'll be able to get more information about those things. Now, the next thing I'm going to be mapping out is called liquidity. And what liquidity is are going to be areas of interest where we've seen price swing, and mostly going to be areas of upper or lower wicks. The reason why is that the market loves to target these areas, find a little bit of a support, fake price into a direction, take stop losses or take profits, and fulfill buyers or sellers before moving into the opposite direction. So I like to use the rectangle tool for that. And there's a couple areas like here, for example, I'm going to add a rectangle in this zone. You'll notice that there's these lower wicks here and price pushes up really aggressively from there. We have another area right here that has lower wicks and it has not been retested by price. We have an area up here as well. Even though we have this upper wick and we see these candle bodies, this whole zone, price came up aggressively and sold right back down, which would have been a bull trap, essentially faking people to the top side, thinking that we were going to go up to 140, 150 before we sold back off aggressively the next day with a huge bearish engulfing candle. We even have a little liquidity zone right here, which had just been retapped. This one was just tested, and this was a previous liquid zone over here, which is why we like those areas, because price likes to get down to these zones, find some sort of indecision, uncertainty, and then swing the opposite direction. You can see there's also a little bit of liquid right here. So you can continue to map out the chart and find these zones. Kind of like what we saw with the support, resistance, and trends, the more of them you can stack together, the better. You'll also notice that if I drag this zone out, this whole range is going to have a gap in it. So this gap is a really strong range as well for price to want to come back down. We've held it as a resistance 1, 2, 3, 4, 5, 6 times essentially before a huge breakout, then found it as a support hold twice, and then huge impulse move to create new all-time highs. This was an all-time high resistance that was broken, turned into an SR flip. So a really nice strong zone. This would essentially be an SR liquidity zone too. So you can mark that gold if you wanted. So this would be a golden zone for price to come down. If it wanted to ever come down back to this zone, this would be a strong area that would be very unlikely for it to want to break to the downside. And if it did hold support on top, still maintains this long-term bullish sentiment, that 78 would essentially be that floor. So now, all within one video, we figured out some of the candlestick movement. We've been looking at the liquidity zone, support and resistances, trend lines. And one of the last things I'm going to be adding to this is going to be the Fibonacci retracement tool. And what I teach in the EPIQ trading floor, this tool is more used for finding the ranges to go for the extension versus finding the support. Most people use this as a static tool and try to think that if the bottom is fixed, then once the Fibonacci fails out, then it fails out. When in reality, you can always move the bottom depending on how far price pulls down. So what I mean by that is previously the Fibonacci was up here, and we were running this Fibonacci from one liquid zone to the other liquid zone. We ended up coming down and testing this double bottom. When you get a double bottom, you null and void the Fibonacci, so instead of just throwing it away, I just drop it to the next range low. And you can see currently we're testing in this special little range right here, which is what we like to call the golden pockets. So if you go into the standard golden pocket, you have a really good opportunity of pushing up to take profit 2. If you stay up in the 50 fib, which is a little less common in crypto, it's more common for options and futures and things like that. This can take you up to take profit 1. And then if you drop down to the epic golden pocket, which is very common in the crypto space, then you can see price push up to the take profit 3 point. So if price was to currently hold where we're seeing this, we tap down to the epic golden pocket. If we wanted to swing to the top side and break this top trending resistance, or let's say up trending resistance, we can easily see price push up to 139 to 148K. That's going to be where the take profit 2 to take profit 3 range is. And just so you can put your eyes on it, take profit 3 is going to be here. The take profit 2 zone will be here, and the take profit 1 zone will be here. So that's kind of how you can map that out by zone. The further price goes down, the further it pushes up. I go through a lot more of this in the EPIQ Trading Floor Academy. All of these things I go by step and in way more detail in the EPIQ Trading Academy as part of the EPIQ Trading Floor. But just to give you a brief idea as to how these things are working out. And then let's say hypothetically price does come down further and we hit another double bottom. Then all I'll do is take the low of the Fibonacci and then move it to the next liquidity zone as a support. And then you'll see here this epic golden pocket now is sitting right in this perfect spot. And because price is dropping further, we have an easier push to the extension, or let's say a higher push to the top side. So now the TP2 to TP3 would be 143 to 155. So now we're officially getting over 150,000 if price was to drop down into, let's say, 100,000 flat, test this liquidity, and then aggressively push to the top side. And kind of to tie this all together, where it comes into play and where you can make this valuable essentially for any chart is now you have some key levels to look for if you want to get into a long position or a short position, if you're trying to long-term DCA, whatever it may be. Now you're going to have some key areas to look for if price goes down there and you want to see how price reacts. Then you could find some potential areas that would be great loading zones, which would be better than just chasing the top. To give you an example, if you go to CRO, which popped off recently, there's probably a lot of people that ended up buying the top up here. They got excited because on the hourly time frames, on the lower time frames, this thing looked like it was going to go to skyrocket. It looked like it was going to hit $1, and people started to get the fear of missing out and started buying in really aggressively. When in reality, if you would have looked on the daily, you could see that this is heavily overbought. Way more price action up here, lots of downside room. Even if you bought that top from here, you're down about 22% currently. And then just this candle alone is about a 56% loss if it wanted to lose all of that value. So from here, what those people could have done instead of buying the top is using a Fibonacci and see where some of those key levels are. So now you're seeing a little decent hold right here in the golden pocket. And then you're also seeing a nice little bit of a hold. If this wanted to drop back down a little bit more, the epic golden pocket is going to be just under that zone right here. So if it wanted to hold in one of these two zones and that was considered your loading zone and price ended up fulfilling the Fibonacci moving to the top side, then you could see it push up to the TP2 to TP3, which is going to be anywhere up here from 45 cents up to 53 for take profit 2, and then 53 cents to 62 cents for take profit 3. And that obviously would be a nice little push from current price. You would still be looking at the potential of hitting 114% trade. And you've minimized that risk a lot because you got into it while it was dropping down, not chasing green candles when it's overbought. And when you're trying to find projects that are oversold, most of the ones in the crypto space right now are oversold. So if you zoom out on the daily, you can see that this is still at range lows. This would be considered oversold. Aptos, oversold. Arbitrum, oversold. Atom, oversold. AVAX, oversold. Binance Coin, overbought. You can see going into an uptrend. Brett oversold, Doge oversold. You kind of get the idea. So anything that's kind of on the lower end of things that has more upside is going to be considered oversold. Everything that's a little bit on the higher end, like for example, people that are buying Doge up here, for example, this is when people were buying in and FOMO chasing. The people that bought when it was oversold were buying down here. And then the people that are buying when it was overbought got in up here. And then these people that bought in when it was oversold got in and made about 300%. The people that FOMO in at the top and chased those green candles and bought in when it was overbought are currently sitting down anywhere from, let's say, 47 and potentially down to about 65% at the lowest. So putting in $1,000 and being 400 to 600 down on that 1,000. That's the big difference between buying when something's overbought versus oversold. Just to even tie this in and give you a little bit of extra sauce, if you go from to the low to the high on Doge, notice where price is sitting. So even if I take this to the range low, you'll notice that the Epic Golden Pocket has been holding and testing. So this could be a nice little loading zone, for example, for Doge if it wanted to take another wave. And then from here, you still have plenty of topside room to potentially get up to 70 to 80 cents, almost 90 cents if you really wanted to. And that mythical dollar that people have been waiting for years on Dogecoin. Polygon oversold, Radium oversold. So if there's anything that you learned in this video, just make sure to drop some love in the comment section and throw some love in the Epic trading floor as well. So in the part 2 video is where I'll kind of talk about the overlays and oscillators, how I tied them in, how I use them. I just want to give you all a really nice base reference point from looking at a chart from a candlestick perspective, from a supply and demand, from liquidity, from support and resistance, from a Fibonacci perspective. All of those things kind of tied into one, so you can get a general idea of kind of where price is sitting in relative terms for each project, and whether it could be an area that you could be adding for DCA, could be taking profits, shaving profits, creating moon bags, getting into a short position, adding during accumulation, all those different types of things. And again, if you want to come trade with me and join us in the Epic trading floor, that link is going to be in the video and it'll be in the and if you want to come join us in the Epic trading floor, you can always go to epictradingfloor.com or hit the link in the comments and in the description. I hope everyone has an amazing morning, afternoon, or evening, depending on wherever you tune in the world, and I will see you in the next video.